So we're trading downward, and I'm scared that we're going to get a new low of the day and that we're going to go below bar one and even test yesterday's close. Good afternoon, everyone, or good evening, or hello, California. Tim Fairweather is the only man who on Saturday morning at 1:30 talks about trading, his time. We started the day with Al Brooks at 6:30 on his time. Then we switched to Tim Fairweather trading on Friday evening, midnight. And now we are with me, Tim Stout, and it is 6:30 on Friday evening. Isn't that the fabulous thing about trading, that is so flexible that you can basically work from anywhere, anytime, trade any time frame, trade any size, the ultimate freedom of this career. So where are we? Let me first put my mouse with the big circle. There we go. So we're trading downward, and I'm scared that we're going to get a new low of the day and that we're going to go below bar one and even test yesterday's close. We had, of course, this big rally. We opened below yesterday's lower high above the 77 high. So that broke a lower high, turned the market always in long. There was a buy above one, and then a buy above 2, 3, 4, all this way, and then a buy above 8. I'm looking to see who actually got stuck in this break of the rally. And the bulls above, if you think about it, the stop was below 7. So this is still all in short, and the target is just a little bit below bar one low. But trading through here, your stop was below bar one. Trading above 4 made a new high, so you could have a stop below 4, below the 4 low. And then we made a new high, your stop was below the 7 low. All of the bulls that bought above 8, they had a chance to get out after this sell-off. The bulls buying above 9, they had a chance to get out after this sell-off. The bulls above 10, they had a chance to get out after the big sell-off. And the bulls above 11 as well, they had a chance to get out. But the bulls above 12, they didn't have a chance to get out yet. Price didn't come back to that target. And that makes me concerned that at some point, now obviously the bulls that scaled in above their next bull bar, so you buy more above 18 and you get out at your average price, that is a recipe for getting out. Like if you're buying so late, you probably have to scale in lower. But alternatively, that could set up that this whole thing, so from the 7 low to the 13 high, that range, if that range has still bulls that are trapped, it could set a breakout and a measured move down to lower than bar one low. So somewhere in this 50, 54 range, we could test all the way back down. Yesterday was a strong sell signal bar on the daily chart, and we didn't test below the sell signal bar. Bears would love for price to come back to yesterday's low. And I think there is a big chance that we might get there. We might get there at the close of today. We might get there earlier. But this is turning into a bear trend. And this is actually a bear wedge that might even get a failed breakout to the downside. So there's also a measured move from the 25 high to the 44 close downwards to 57.42. Can we still go all the way back up? Yes, but it's unlikely now with, for example, bar 49, with bulls being stuck up there. If we break the 44 low, break the 43 low, then the bears below 49, they will actually now take it to the low of 1. So 44 low, that just got broken. Did it just get broken? 68.50, 68.25, yeah. So the sell below 49, well, if you have a stop above 47, 1-to-1 is already 52.25, right? So I think that the bears will be trying to get us to the low of bar 1 soon. And that would, with a big rally up and then price coming all the way back down, on a higher time frame, that is a big reversal bar, right? It is opening here, goes back, goes up all the way, and comes down, and that basically creates a big, in that case, then a bear bar with a huge tail on top of the bar. Now, there's two things happening here. Yesterday, of course, was the end of the month. The end of the month often has a big rally or a big sell-off in the final hours of the day. Sometimes that starts around bar 40, sometimes it starts around bar 70. And it happened during bar 77 and 78. And even though you think these bars are big, it's about 35 points, that is still relatively small compared to some of these moves that we've seen in the last couple of months. The first day of a month, and especially if the first day of the month is also on a Monday, for example, which happens 3 out of 7 times, then the first day of the month can have a huge rally as well, not only in the first hour or in the first 2 hours, but also all the way into the close. So will this be a rally that was originally going to be a bull rally, but will it end with a big bear rally, or sorry, with a big bear sell-off into 33.25 and lower? We'll still have to see. Right now, chances are that we'll go below bar 1 and that we'll get somewhere close to yesterday's close and in the 33s as a target. I was saying yesterday, like I'm a member of a couple of trading groups. I was saying that yesterday at the close, I bought a big set of calls that I would hold for 57.90 and 5800. So I unwounded those this morning around bar 12. I was also trading this leg, of course. As strong as this sell-off was, one thing was big here. This sell-off didn't breach this higher low, right? And interestingly, if you look at the daily chart, this sell-off was strong yesterday, but it didn't breach this low as well. So 25.25 right there, that higher low, the bears didn't manage to break it during yesterday. And so what the bulls will do, they will do the same as that you see on the chart today. They will buy this close, and they're trying to get back up to the high of here, October 8th, which is 58.07, but we missed that, right? We hit 58.0375 and not 58.07. So the bulls are still buying more and buying more, trying to get out at that 50.07 high. If we break that low, that 25.25, then I think we'll come down significantly more into the 5600s and lower perhaps. So today and the next few days could be very interesting. So that is your typical end of month and start of month type of behavior. But there's of course one more item that plays into the hands of investors and traders, and that is the election of next week. A lot of price action was very bullish leading up to the elections. But now, with only a couple of days left, a lot of traders will take risk off the table into election night and either sell parts of their positions or hedge their positions with puts, for example. So I think we had been running up with the elections coming, but I think for the next couple of days into election night, people will take some chips off the table before seeing which candidate is gonna take the White House. So that is sort of a put that's under the market as well. Good entry bar for the bears under 49. So still likely to go below bar 1 and into a new low of the day. The ultimate target, I think, could be 34, 35, 34, so just around yesterday's close and yesterday's low. But we'll have to see. This was an attempt at a major trend reversal, but it failed. when will the bulls start buying? Which bulls are actually trapped? Well, the bulls above 12 are trapped. They got stopped out or bought more and got out. The bulls above 32, they got trapped, but they already got stopped out below 29. No bulls above 37. 37 never got triggered as a stop entry. And here above 45, these bulls are trapped and stopped out actually. The bulls above 46 are trapped and stopped out. And there's no bulls above 48. So I think that will still come down a little bit lower, or come back into this range and then sell off again. So everything is all in short. I would not want to be long until I see significant break of a major lower high. This was a lower high, but it was not significant, right? So you had a little bit of a small inside bar and a small inside bar here, lower highs. But it looks like this is going to sell off at least a little bit further and maybe even all the way into yesterday's low. On the monthly chart, so we triggered the buy above August. We triggered a buy above September, but then the entry bar above September is October, and it's looking really bad, right? So every bull that bought above September is thinking, darn, I want to get out. I realized that that was probably a bad buy. So 58.30.25 is their entry price. They want price to come back there, and so that they can take an exit. The bulls above August, they bought 51.81, but the close of October was higher, right? The close was 57.38.50, and their entry was 57.29.75, so it's higher. So the bulls above August, they still will hold and think that we can go further up. I think we're going to go down at least 66% of the stop and the entry above September. So I wouldn't be surprised if we dip briefly below 5,400 on the monthly chart. So this is an entry bar for the bears, the low of October. I think we're going to trigger it, like Al was saying already this morning. We'll trigger it somewhere in November. We might sell off briefly to 5,400 and then come back somewhere about where we are now, right? So somewhere 5,700. On the weekly chart, so on the weekly chart, it's getting interesting, right? We have our higher low 57.24 just right there, and the bears were almost able to break it, 57.32, but they didn't. So these bulls are still trying to get out, break even here, and break even here at the 5,800. So that is for next week. So next week we'll decide, will these bulls break even at 5,800, or will we hit their stop, or will we sell off and maybe close the gap there? So 54.46, somewhere in there, 5,400 will be a bear target. And then here on the daily chart as well, right? So we had this higher low. Bears yesterday didn't manage to break it. I think that's disappointing for the bears, but the bears also had 2 times risk based on their entry bar here. Why is this not plotting? Oh, there we go. The bears had 2 times risk on their entry bar if you sell the close. And so a lot of bears will have taken profit yesterday at that close. And that's why the market is basically turning back up so strong, right? That's a lot of bears that are waiting for this price here so that they can sell that price. They're hoping that this is going to be a measured move. So you have a range here, a higher low here, and then we break the higher low, we come back to test it, and then we sell off to 56.70. So the bears were waiting today for higher prices to sell, and they loved selling at 50. Where are we? At the 5,800, around that number, to try and break this higher low again, and that's what we're trying to do now. 60-minute chart here. So these bulls above here, they got out. These bulls above here, they're hoping to get out, which is 57.70. The bears are hoping the opposite. The bears are hoping that they can get down a measured move from that higher low, that whole range down to 5,700. Right now, it doesn't show me as enough urgency by the bears to create a strong sell-off. So I think we'll be around 5770. We'll go up a little bit, we'll come down a little bit, but I still think that the low of the day and the low of bar one is the target for the bears, and they have every chance to get there. What about bulls? Well, the bulls were able to try here. The bulls were able to try here, and they tried here, and none of these reversal attempts was successful. So the bulls are, after 3 tries, they know that they don't have enough strength to come back to the highs and to come back to the high of 12 and to come back to that 5807. So without any significant break and a retest, and then probably some type of a double bottom, there's really not much for the bulls here to buy. None of this looks strong enough, and none of this looks appealing to me. Market is always in short, so the only thing that I would want to do here is sell and sell higher, right? Sell as high as you can, but don't forget to sell when you must. The current short is below 49, and the 50 close, and the 51 low, so bears sold below 51 low. And if it now goes higher, well, they'll know that 63.75 was the last chance of selling. Even a 50% pullback from here would just be 75. They'll sell 75, the moving average, and then price will probably come back down there. Another way to look at this is to say, well, this is now a trading range, right? So we have a third and a third. So if price makes it into the top third, I'll sell there, and then when price comes back in the lower third, I'll sell there. But the chances is high that this is just going to drift lower and lower and lower. Right? Now, when did this become a bear trend? Well, I don't think at this yet, but what was important with the 16 low is 2 things, right? It stayed below the 7 low, so it didn't break the higher low. There was no bear trend yet. But if you had your stop above the 13 high and you sold a tick below the 13 low, you didn't just get 1 time your risk, you actually got twice your risk. Well, if this was a strong bull trend, for the bears to get twice their risk, that is exceptional, and that's weird, right? So the bull trend was definitely over, and I think everybody felt that when they saw the market coming down that far. So the bears were confident. This is a break of the trend line, right? A very steep trend line or a very steep channel, depends on how you want to draw it, but it's a break of the trend. This is a wedge, 3 legs, 18, 19, 21, 22, 23, 24, 3 legs up. It's a wedge test of the trend extreme, and it's a lower high major trend reversal below 25. Can you sell below 25? Well, it's difficult, right? Because you're taking a big guess, but these were higher highs and higher lows as well. So probably easier to start selling as soon as we break that higher low. And that's what I did. You can see that a lot of bears did that. As soon as we got back to those ranges, bears started to sell. So for me, the best sell was below 28, and then more below 33, and then definitely below 38 or the 39 close, and then still waiting for your targets here. Now, when did the market become always in short? Well, definitely at 28. The first chance to sell after the market became always in short was 85.50, and 20 points below 85.50 for a swing is 65.50, right? So you're waiting for the market to clearly become always in long by breaking a lower high. The first signal bar that you then get, that is the signal bar for the 20-point swing. On small days, the 15-point swing, but the 20-point swing. So the market became always in short here. After a pullback, the first signal bar here was the below 33. 20 points below 33 is 20 points, it's right here, right? And so you can see a lot of profit taking at that 20-point target. To the upside, same thing. The market broke a lower high here on bar 1. So bar 1 is the first bar when the market became clearly always in long. Your entry price, one tick above bar 1, is 71.25. 20 points higher is 91.25, and that is about here. So 20 points there. You can see that the market went sideways there for a number of bars. So that's how I look at swing targets. So we have the swing target already. So there is a chance that we'll get deeper and deeper pullbacks. We might pull back all the way to the 48 low to the 47 high, but then I think we can still come down to the 44 low again. So every bounce here is just going to bounce back below 57.70. So what do you do here? Well, we're low, but that's not a reason to buy. We're low means that you're probably waiting for a pullback to sell, and that's probably the better strategy than to start buying. Can you buy here? Well, if you buy 52, where do you have your stop? You probably have it below 52. So you're taking a big gamble with a bull bar after 3 bear bars. You need at least 2 times your risk for such a gamble. So you're betting that we're going to come to 79. Can we come to 79? Yes, because there's bull stock above 46, so there's a chance that we do. But I would never sell. I would never go long above a bar 52 like that. The fact that I would never go long above a bar 52 like that doesn't mean that it's not going to work. Chances are just quite slim. I think whatever comes here, I would rather sell it back to, again, the 44 low and holding part at least for the bar 1 low. Trying to see if there's some type of a channel that I can draw, but I'm very bad at drawing channels. So new month, which means that we closed October. These are the returns, and I keep always track of this in a spreadsheet, but these are the returns per month over the last 20 years. So you can see here the years on the left, starting at 2003, working my way to 2024, and then January to December. And then we closed October with a minus 91% downside, right? Now, the funny thing is that that whole downside was caused by yesterday, right? If yesterday wasn't a trading day in October, this would have been a green month. So all of the October results were caused by the outcome of yesterday, the fact that we ended so low. I've been saying about September when it started, the fact that everybody says that September is always negative is basically only caused by recent memory, because it's not always negative at all. Like, look at these results: 8.5%, 9% in 2010, double digits as well. So the fact that September was bad for the last 4 years doesn't mean anything for 2024. And you can see how September closed at 2.5% up. So November, if we look at November, you can see that most of the Novembers have been green, but the average of November is just 1.95%, heavily, of course, impacted by that minus 7.5% there in 2008. What happened again in 2008? Oh yes, little banking crisis. So that was all the way there. I think Lehman Brothers fell in September, and then we had the restructurings and everything going into October and November. In total, we lost 50% of the market that year. So, so 1.95, but overall a green month, and then December, of course, green there as well. So we'll see. Like yesterday was caused by that final day, so that was quite interesting. Can you create any conclusions out of this, apart from the fact that April, May are the best months of the year? You can't really draw conclusions out of this. But it's always fun, of course, to look at these numbers. Okay, so that was the pullback 52 253. Can we break the 52 law, and can we then get all of the bulls that bought above 52? Can we get them stuck? And then that would mean a measured move that whole range. So measured move that whole range takes us to 53.75. So I'm still holding short for a swing, and I'm holding short for scalps when I see them. The last scalp was below 51, so I'm looking to close that scalp now with the pullback when we get back to the 51 low. So then I'll only have my scalp short. Sorry, I only have my swing short on and not my scalps. So what's the difference, for example, between buying above 12 and buying above 23? Well, I always say that if you have a bar, right? So let's paint the bar. And this is the high of the bar. So you buy one tick above, right? That if you have a bar that closes within my signal bar, that for me is already a reason to probably want to get out, break even at my entry. And I think a lot of market participants are looking the same way as me. At least that's what I try to believe for myself. And what you see here, if you buy above 12, you never got a, like you have 13 closing inside your signal bar, but you never had a chance to get out. Like obviously all of these other bulls had, but the 12s, they didn't, right? Above 23, you buy above 23 and you see 26, 27 went up, got break even to all of the bulls that bought there, and then went down. So that means, in my view, that there's bulls stuck there that are not stuck there, right? So I look at every bar to see who's buying and who's selling and how are they managing their position. Now, of course, at some point, there weren't a lot of bulls buying above 12, right? Because the risk was so big that this probably was a very tiny position if you had bought above 12, and this was then a big position, you still made money. But, and that's why there were way more bears there than bulls. That's not true because everybody who buys sells as well, but that was what's happening there. So there's a trap there that was not there. So I look at every bear bar, every bull bar to see who's trapped where. So were the bears trapped below 51? Yes, they sold more at the 52, at the 53, and the scalpers, they got out, right? So I got out of my scalp below 51. Still the swing for these targets and for yesterday's close. Big trap here, so 45 and 46. Well, these bulls above 46, they probably bought somewhere in here, trying to get out, trying to do the same as here, that when price comes back somewhere in the middle, they'll get out, but nothing happened during 49. They just got stopped out on their scale-in and everything, so the whole position got stopped out. That is a big indicator that price will probably go lower, at least for a couple of more legs. So now these bulls above 52 got stopped out as well. Even if price comes well back where they entered, they'll sell there, and then it goes back to the place where they got stopped out, and then they'll make their money back that way. Excuse me. Look at the 15-minute chart. So 15-minute chart, you had this huge gap, and traders are wondering, if you see a gap like that, that is a breakout, right? It's an invisible huge bear bar followed by multiple bear bars. So where is the breakout from? Well, there's a low here, there's a low there. We didn't even pull back anywhere. So it could even be, could it be a breakout below here? Well, we pulled back to that level, and you're trying to find the breakout point because the breakout point determines the measured move. So let's say conservatively that this was the breakout point, then the measured move was the high of the range to the breakout point downward, 57.43. Okay, look what happens when we reach 57.43. Bang, we go back up. So was that the target? Yes, that was the target. Now, what are the bears thinking that are selling below 54? Well, they're thinking, probably need to sell a little bit more to get out of this mess. Will they have a stop above 53? Yeah, they will have a stop above 53. So what will the bulls do? The bulls will put a stop entry order above 53 that when these bears get stopped out, they can get in. But I think the bears will not let it, and they will just get another chance to get out, selling either more at the 55 close or selling more in here, but price will come back probably into the 54 low to give these bears a profit on their first entry and profits, a break even on their first entry and profits on their second entries. So not much doubt about that. So yeah, so we had Al this morning, fantastic commentary, 6:30 in the morning his time, and then we had Tim Fairweather doing Friday evening at midnight commentary. I don't know if I would be sane enough to do commentary at Friday midnight, but he is. Aussies, right? They're crazy. And then we have me, so this is now Friday evening, and then Brad will come in. I believe Brad is on Mountain Time, if I'm not mistaken, and so he will take us into the close and also do an end of day recap. Usually Trading Room has 2 shifts, sometimes 3, sometimes 1. And if Brad is in the room at the close, he will take the attendees through an end of day recap where he goes bar by bar to say what he saw and what he was experiencing during those bars. So that is the whole schedule for today. All right, so good for the bulls that they managed to trap some bears, but bad for the bulls that they don't then get the bears stopped out, right? These bears are now managing their position. The swing bears, the swing bears, of course, below 33, they have taken profit on 20 points. Other swing bears will just keep swinging down. Every time we make a new low, they know that they're in the right trade because we're making lower lows and lower highs. Current lower high is 53. The current major lower high is above 47. Hourly chart. So we had this big bull bar, and we trapped a bunch of bulls here above the bull bar, but we also held below the bear bar. So this was yesterday's high. Some traders, of course, sold below that big bear bar, and they never got a one-to-one target. They sold more at the close of the first hour, and now that we're back at their original entry here at 68 or 67.75, now that we're back there, they can take profit, and they have a 35 points profit on that scalp. That's a scalp on the hourly chart. So on the hourly chart, these bulls are trapped. Bulls are hoping for a major trend reversal going back up to the 58.03 and then 58.07. Right now, it's 50-50, I think. So I still think that we can go lower. But if we break the higher low, and the higher low is currently here, then I would not be against the idea of a big rally all the way to a new high of day, right? The price is interesting for the bulls, right? We're in the lower parts. We had a big rally when we were here. There's still targets up here. There's a target of 58.07 on the daily chart. So if the bulls can get it done, overpower these bears, then we could rally really quickly, in my opinion, on the final hour of the day to a new high of the day. Show you something, so I'll just take this and put it on my screen and prepare it. This is the first day of October. So this was the first day of last month where we had this big sell-off as well. The first 2 hours was a sell-off, and then we basically went sideways. This is and this was the big rally at the final day of September. So we had this big rally and then this big sell-off into the first day. If I show you September, so the first day of September and the final day of August, you can see what happened there on the last bit of the day, where you have this big acceleration of the trend that had been going on since around the midpoint. If we put this chart upside down, then we would basically have a rally at the first hours of the day, turning into a big sell-off in the final hours of the day. So it could be that the reverse of this is happening and that we get this big sell-off towards the close of the day. And you can see the opposite happened at the final day of the month before, so at the final day of July. Going 1 month back, not going to go too much, don't worry, but I want to show the pattern. Look at this first day of August. It just sold off relentlessly all the way into the end of the day. So first day of the month, I'm always prepared for a big trend day. And then July, I think, was that an outlier? Was that FOMC? No, yeah, that was just a trading range day, but still at the closing of the day, quite dramatic effect. And then June is the last one. May was not significant because it was a FOMC day. You can see this huge rally. I remember this because I was at the conference in Orlando with Al Brooks, and people were talking about it. But a huge rally of more than 60 points at the end of the day, just in 4 bars, right? And then totally reversed at the open of the month on June 3. But during the middle of the day, that reversed completely back up as well. So are we doing the same thing today? Are we completely reversing the bull trend? And was the bull trend completely reversing that bear sell-off in the end of the day, start of the end of the month, start of the month combination? It certainly looks that way. And so I'm still standing by my belief that unless the bulls are doing something very strong, that we're just going to go below bar 1 and maybe even to 57.34. The first big target is still 55.50. Is that the low of 1? Oh yeah, that's the low of 1. And I'll debate what happens when we get to the low of 1. I'll debate to see if I take my swing profit as well. Will I still be scalping here? Maybe, but not below bear bars. Probably scalp reversals. Because you got to see that we're coming back to an area of support, right? There was some strong buying here. We're coming back there. Not a reason to buy, but less of a reason to sell this low into new positions. You know, positions that you've had on since here are fine, and this was a great scalp below 49, and then here we come back to the low of 51. But the last short below 54 had a very bullish entry bar. So what will the entry bar be for the short below 56? Will probably either be a big give up bear bar, which then attracts profit taking, or it will be another bull bar. So there's more bulls buying below things here than that there are bears selling below things here. That 55 entry bar below a strong bear bar 54 is a signal to the market. It's a statement of the bulls to the bears that selling below things, that time has passed, right? That was good all through here, but now it's over. You can also say, well, this leg down, this pullback is way more than 75%. If I'm looking at trends, I'm always looking at the size of the pullbacks. So here you have a breakout below a range, and then you get this strong bar 3 and 4. Well, the pullback of that range is not even 50%, right? So I think the trend is still very strong. We get a new low, and now I'm measuring the size of this pullback. Now it's a little bit more than 50%, but it's still not 2/3. So the trend, I think, is still strong. Now you have a very weak pullback, not even 50%. So I think the trend is getting stronger. And then you have a big pullback, and now your pullbacks are two-sided and more than 2/3. I think we're not in a bear trend anymore. I think we're in a trading range by bar 23. On the next low, I'm going to take profits. And so then you get even bigger pullbacks. So the size of the pullback is very indicative for the strength of the trend. Now the pullback from the 7 to the 12 high was almost 100%, right? That was like 90%. So there's no bull trend anymore. If the pullback is this big, you're probably in a trading range or even in a bear trend. So the next test of the highs, all of the bears find a possibility of getting out of their longs. So that was probably somewhere in here, and especially if you see a wedge form, profit taking is about to kick in heavily. And then there's nobody left to buy at these highs. Market just has to come back down. Now, the probability here is that you just go sideways for forever, right? But that means that the probability of sideways is just a little bit higher than the probability of coming down. And we had a situation here where, especially with bar 39 and then with bar 49, yeah, we're just coming down for a couple of more legs. What are the bulls hoping for? The bulls hoping for a bull bar like this, a 79, or a reverse of a 77. That would put the market instantaneously back always along, right? But these three bull bars could not even put the market back always along, right? Because 49 just reversed all of the work that they've been doing. So there's no bull willing to buy even something like this because they did that, right? And it turned out very bad. So bulls are not buying unless we get a big break of this trend. So break of the trend, test of the low, and then a major trend reversal. So nothing here is going to attract the bulls from buying heavily. They know that the market is with the bears and that we're going lower. So the only thing that the bulls can do is do a major bull bar and then follow through, and then I would be willing to buy. But I'm not going to buy above any of these. Even if we get above these, you can always buy later. But right now, I am thinking that we're going to go to 55.50, and I am thinking that there is a chance that we might even go lower and test around here yesterday's area. Some traders have difficulties trading bear trends. They always like bull trends more. Well, if you want a second guess at your price action reading, you can always look at a mirror chart, which is basically a upside down version of the regular chart. So anything that's bullish on a mirror chart is bearish in real time. And so ask yourself, if you see this bull trend, are you looking to sell this bull trend? With what reason? Even if we come back here, we're probably going to come back up. So if there's nothing to sell on this bull trend, there's nothing to buy on our bear trend, right? We're making continuous higher highs and higher lows. We need to see one of these higher lows, in this case, this one, get broken before we can go much lower on this chart and so much higher in real time. Now, what if the bulls manage to break? Well, then we're probably going to come in this area and then test sideways here for a long time. So we can still come into even to the low of 48, but then still we would come back down, most likely to the lows of 44 and to the range of here. If you take the who's trapped on the 15-minute chart, who's trapped on the 15-minute chart? Well, the bears couldn't sell below this bar, right? Because it was a double bottom. So nobody got trapped below that bar. The bulls bought above here, above here, above here, and above here. So there's bulls trapped here, just like on the 5-minute chart and on the hourly chart. Then bulls bought here. And then when they saw this one, so this is 92, this is 92. When they saw this one, well, they are about to be stopped out with a stop below bar 1. So they're trying to buy more to get back to that high, but they're probably going to find themselves get stopped out. Well, measured move of that whole range to the downside, it would be for next week, brings us to 5707, 5700. So it's very important to see what we can do with the bar 1 low. Will we just double bottom with it, 5550, or will we actually break it? There will be stops from the higher time frames there for sure. But what are the bears doing? Well, the bears sold below 54. They sold more higher. They got out. And there is no new sell just yet in the workings. So the only sell that's working right now is probably the sell below 49. So the bulls have every chance to get this higher, but they're not doing it. I think we want to see 55.50. And can the bulls create an exact double bottom and go back higher? Or will we just plow through that support and go lower? Okay to take profits on shorts this low in the range, but probably not okay yet to start buying without any setup. You're still in a strong bear trend. So the fact that you're emotionally maybe not able to hold short doesn't mean that then you should just start buying, right? You need some type of a better bottoming pattern. This is going to become a magnet. And as soon as we come close to the magnet, and we're currently 4 points away from the magnet, it could have a very magnetic effect very quickly. We're not selling off as strong anymore as we were on the 15-minute chart, but every close is lower than the prior close. So the bulls are not doing anything either, right? The bears are getting lower prices and lower prices. It's not going fast, but it's still going. And I'm still looking at the measured move from the 13 high to the 7 low, downward to 44. Now, how about the earlier conversation about that this is probably just going sideways to up for the rest of the day? When Al was discussing this early on in the day, yes, and he also said 20% chance that it is not going to be sideways to up for the rest of the day. And when you saw 1, 2, 3, 4, 5, 6 bear bars in a row, that is time to then probably throw that statistic out the door and start trading to the short side, right? How many bear bars do you need before you start shorting? Well, you can short, if you look at this or any of these bear bars the whole day, right? Is there one stop entry where you would not be able to get out, break even, or with a profit? You could not sell below 7. If you sold below 13, you got 2 times your risk. Even if you sold below 15 and you see 16, You think, darn, I have to get out. You place a limit order to get out break even, and you get out break even. Below 20, you can't sell. Below 22, or put your stop below the most recent lower high. Price comes back down, and you get out break even. You can make a couple of points on your scale in. Sell below 25 works. Sell below 26, 27, 28. Sell below 30, never triggered. Sell below 34, you see a bull bar, you get out break even. Sell below 35, lower high was here, never got hit, so you got out break even. Sell below 38, you got 10 points. Sell below all of here, well, sell below here, your stop is there, so you still got out with a profit. And then sell below 49, sell below 50, sell below 51, you still made money. Sell below 54, you scale in, you make money. So the first sell where you maybe get trapped is now below 58. But stop is probably above 53. So what happens then if 59 is a huge bull bar and it closes higher than 53? That would make me want to buy it, but right now it doesn't, right? So 59 can still be a trap if it doesn't break a lower high. We're in a bear trend. As long as that lower high isn't broken, the bear trend is still intact. Bears will sell this. Now, if you're selling below 58, and you see 59, are you gonna short more and get back to your entry? No, you're probably gonna think, wow, I'm already happy if I get out break even from this selling below 58 horrible bear bar. So what you're gonna do is you're gonna get out break even, right? You're gonna get out break even at 63.50, selling the close of selling below 58, selling the close of 59, 63.50 or thereabouts. That's where you're going to get out. You're not going to get a break even to your first entry. So how about buying above 59? Well, it's still tricky, right? I wouldn't want to buy above 59 until it breaks 53. And also I would want to see two bull bars, right? One big bull bar, yoo-hoo. Where did we see that before, right? Where did we see that before? Can it be 37? So I'm not going to get trapped above 58. I need to see these bears get more trapped. I need to see this stop above 53 taken out. And then I'll look to buy above the next bull bar. Without it, I still think we can just come down instead. I think just like me, the rest of the bulls are skeptical as well about this bar 59. Why is it not shooting up like a rocket launched by NASA, right? It's not, because it doesn't find enough people willing to enter. So we went one tick above 59 and then immediately sold off. Part of myself scoring my own trading is to see how much a move went in my favor. If a move doesn't even go a point in my favor, I know I took a very bad trade, right? Every trade should at least go a point in my favor. That shows some willingness from other bulls or some willingness from other people in my team to move the price in the direction that I'm buying or selling. We didn't even go, we went literally one tick above 59. That is just the ideal shape up of a big trap. And what happens if the trap succeeds? That whole trap becomes a measured move to the downside to 46. So watch out if you see bars like this in a bear trend. These are just fantastic prices for the bears to sell. They know that they can't sell this low, so they'll sell a little bit, not to miss maybe a bear collapse, right? So they put a position on so that they have some skin in the game, just in case it collapses on them and they want to be part of it. But they'll sell their full position really here at the 59 close and then they take the midpoint, or they take the 58 close probably as their profit target or their scalp, and then swing the remainder. Look at what this does. If your stop is above 53 and you get presented the 59 close, if you sell it, you already have 1-to-1 at 65.50, and then 2-to-1 is 62.25. So lots and lots of bears selling that 59 close, and basically just a vacuum of price coming up to an area where bears are willing to sell. Because after 54, bears were not willing to sell below a bear bar anymore. They saw that failing spectacularly. But they got out unhurt, but this was a signal. Like I said, 55 is a signal that selling below bear bars this low is not working. You need to sell these things, these bull bars. And that's what they did on 59. So these bears are break even, right? Selling below 58, selling the 59 close. So we can discard those. So price can still come up a little bit more, but no bears will be stuck right now. So even if we go above 72, the market will be always in long, but it will not be filled with trapped bears panicking out of their shorts. No bears are panicking out of their shorts right now. It was a fantastic bear trap the other day, right? Here. So October 30, bears are selling below 1, bears are selling below 2, no bears are selling below 3, and then the market just continues up. More bears selling here, more bears selling here, but the market was too strong. It takes out that stop. Yeah, and then you get higher prices, right? So that immediately rockets up to 82.25 to 85, that area. Here, the same thing, where the market, you sell below 1, and then the market just turns up on 3. Yeah, that is a measured move up, right? That is just such a big trap that as soon as you see it, and you can wait with buying until you can see that lower high being taken out, because you can buy above 6, or you can say, well, the correct buy was above 5, and then 7 fills you in on your buy above 5, and then you can still get 1-to-1. You can even get 2-to-1 during bar 43. So if you see a bar 59, you wait until the bears are actually taken out by a lower high. The bears are doing everything possible to make this a fantastic bull trap right now. So the bulls are, of course, stuck. They bought that 69.25. They're buying the midpoint. So the midpoint there, exactly the midpoint, 63.50, trying to get back to that 69.25. And then 2-to-1 is 75.25. So let me put that here as well. That's what they're trying to get to. So the market is becoming two-sided here. Can this be a final flag that gets a big bear breakout? I think there's a possibility. I'm still thinking that so close to bar 1 low that if we go a little bit higher, there's a chance that we'll go much lower. We just need better places for the bears to sell. Now another signal bar for the bears that got a bad entry bar. So the bears sold below 54 was bad entry bar. Bears sold below 58, very bad entry bar. Now the bears sold below 60, bad looking entry bar. At some point, the bears know that selling down here doesn't make sense, and selling up here is probably better. Bulls feel that all of their reversals are not working. This whole reversal was a big bear trap, and will probably still get a measured move down. This reversal failed. This reversal didn't even trigger, and the buy above 59, look, the patheticness was that it only went one tick, right? So the bulls are thinking the same, like, The bears can get it down, but the bulls can't get it up either, right? And so the result is sideways in this range. What are the chances that we get a big bull bar all the way through to here? That is a possibility, but I would be looking at that as an opportunity to sell and not as an opportunity to then now get in and hope for it, right? Hope is not a strategy. So if the bulls can break that, 75.25 would be their target. This can go away, right? Big bull breakout would be 58.07. And the possibility is, of course, that we do neither, right? So we don't go to the low and we don't go to the high, and we just stay around here for a long time. We tested the close, and the bulls, of course, don't want a bear close today. So we tested the close on the close of 56, on the close of 57, on the close of 58, and on the open of 59. But the reversal was weak so far. You see a big bear bar 59 like this, but the bear trend is still intact. That is strong profit taking. So there is some type of a measured move target at the 59 low, where just an enormous amount of bears take profit. And usually that is followed by a couple of more legs down. The bears are still trying to form the trap. 69.25 was the buy above 59, and we haven't reached that price. The bears below 60 sold more, and they got out break even just now on 63. So how about the elections? Well, the thing is with the elections, of course, some investors are taking hedging approaches or removing some of their risk. But if you look at the, let's see, can I duplicate this? If you look at the price action of an election, most of the election price action actually takes place overnight. So if you see the price action here, so this is the 2016 elections, right? You can see here, this is the day after, and this is when the market opens. So you have pretty much a normal day, sell off, that comes back up, trading range day. But look here at the nightly, this is midnight, and then here, this is 3 a.m. This is when Europe opens. As the results come in state by state, you can have some very big reactions during the night. And this was the most recent one, right? So where Biden got elected. The more dramatic one in terms of price action, I'm going to say, is the elections in 2016 when President Trump got elected. I have that here as well. And you can see the daily price action, pretty orderly, big bull trend, and then coming back down to the midpoint. But here, the overnight price action, as the first results came in and the exit polls, you had an absolute climax here, buy climax, turn into an absolute sell-off here into the whole night, and then big rally back, and then big rally back, and then a huge rally. Basically, we rallied from 36.90 all the way to 38.50. So if you count that into the 3,000 numbers, that is an absolute insane overnight rally. First, a very big sell-off, and then an overnight rally just into the day. So again, most of the price action on the presidential elections will take place overnight. And it's tricky, right? Because any moment news can break out of new states, and that just has a direct impact on the price action. So sometimes those things are difficult to trade, and I think it's better to just have some sleep or sit in front of the TV than to start trading a Globex session because of a presidential election. It will be interesting, of course, for sure. The bulls above 59, they got out. Good for them. The bears protected that 53 high, and we now have a double top short. Bulls need to do more than one tick above 64 to break that lower high. So the bears now have a double top short coming up. Can they get a big bear signal bar double top short for 59 low neckline and then break up? That's what they want. Chances are that they're not going to get it. So if the bears have their double top, why are they unable to create this big bear signal bar closing on its low and being 16 points tall, right? They don't find enough bears willing to sell with them. One and a half minute left, or 1 minute, 10 seconds left. The bigger the signal bar, the bigger the risk, but also the bigger the reward. So the signal is currently what, 66.25, would lead to 60.25 1-to-1 and 54.25 2-to-1. $15-minute chart, bears sold the close of at 61.50, so they are hoping that price will come back to 61.50, and that's probably likely. Because the bears sold that close on the 15-minute chart, they'll sell more higher, confident that price comes back to that close on the 15-minute chart. Well, here is the 64 signal bar. What a double top short, no? So the bulls didn't get what they want. They were not able to get one tick above 53. The bears didn't get what they want. They have a double top, but the signal is, it's not even bearish, right? It's a one tick bull doji. Would I now have a stop buy order above 53? No, this is so weak that this is turning into a wedge pullback. So this is leg 1, 63, 64 is leg 2. We now get a pullback. We're going to create a leg 3. Then we basically have a mini wedge here from 61 to, no, what is now 65, 66, 67. Bulls are unable to reverse the market strongly. And if it now would form a big bull bar, that would be more of an exhaustion bar than something to pull me into the market. Now, if there's nothing to buy, then can you sell? No, because the bears are also unable to create a strong double top sell signal bar. So this is probably going to be a micro version of this, right? A wedge and some type of major trend reversal and then resumption down. Right now, this is a micro version of this where you have leg 1, leg 2. Can we get a leg 3? But when it falls below 63 low, that is a higher low on this mini bull trend, then we can go down. Some algorithms are just seeing this and they'll sell every tick higher, right? And until we break above 47 high, or even 37 high, they'll do that, right? And they'll sell every 2 ticks, every 3 ticks higher. If their algorithms say that that's a good strategy, that's what they do. Most algorithms, most institutions actually, they don't buy in big portions. They buy in very small portions. If you look at time and sales on the Emini, most of the transactions by far are one lot transactions. But those algos do millions of trades per day, and they sell every tick higher, they buy every tick lower here, they sell every tick higher there, and they just keep selling down, but they also keep selling up. So they sell in very small portions, but relentlessly and all day long. And so it's not that they sell here, a gazillion lots below 49, and that they then just sit here and do nothing. No, they can't get into the market that way. They get into the market, they sell when it's going down, they sell when it's going up, they measure the depth and the strength of those pullbacks, and then they know that at new lows, they're not selling but buying. Everybody buying together at 59, that is profit taking by a ton of bearish algorithms at the same time. So it's a profit taking bar 59. Bears are waiting for the next sell signal. Good sell signal bar, still under the double top. Bears selling. Bulls obviously now want the opposite, so they want to break that double top. That would trap those bears. Bulls buying above 63. Are they getting the chance to get out? If it's a typical sideways trading range, then they're so friendly. They typically let both the bulls out, the bears out, and everything. If it's more violent and more directional, then there's traps. This is a trap to the 64 close because that was 68.75. The high here is 68.75, so probably not all the bulls had a chance to get out. Their stop is below 63. The bears are selling, trying to at least get some bull trap, not a lot, of course, like who bought 64, not the whole world population. So mini traps here, maybe. Bulls are trying to do the same. The bears are selling below 65, and the bulls are trying to trap them by going above 53 and 64 high, which is the double top. So what's the best thing? Probably a flip the switch, so sell below 65, and if it gets above the double top, flip the long, and chances are that you'll make your money back. 2.5 minutes before the end of an hour on the hourly chart. That's interesting. On the continuous chart. So we have 3 big bear bars. We went below this big bear bar and we reversed back up. So 60 to 50 is where bears are trapped. 3 bear bars. So probably even if we get a pullback, probably second leg sideways to down on the hourly chart. But we only have 1 hour left, right? So you can't, even if I say, even if it goes higher, it comes back down. What are you going to do in the next hour with that information? So that's the problem with the hourly chart late in the day. You cannot really make a lot of decisions with that. The bulls are being let out. We still are above that higher low. We still are below this lower high. One of them is going to cave in, but no good short entry below 65. Bears will find a way to get out. You want your short to immediately go in your direction, right? You want something like 1. You buy above 1, it never comes back. It just shoots up like a rocket. You want to have something above 8, right? It just goes and goes and goes. So if you think that 65 is a supercell, but then you see 66, what are you going to do? You're going to admit that it was not a supercell, and you're going to get out and look for the next one. There you go. Bears got break even or profit if you sold more. And the market is back neutral because these bulls, they bought more, they got out. These bears, they sold more and they got out. So market is back neutral. How about some of the other markets? Well, like I have the Dow here. So the Dow did a little bit better because the Dow opened almost, first of all, the Dow didn't sell off prior day so much. And it broke yesterday's high, something that the Emini hasn't. So same always a long type of reaction there. And you got, see, if you buy above bar 1 time your risk, 2 times your risk, and you can see that all the bulls are taking profit at the same point. Why? Well, if you're maxed out on your risk, then you need to do something at twice your risk about your risk. Like you can't, your stop is still here, so you have to take profits. There's nothing else you can do. You have to reduce your position to decrease your risk. And when it hits 2 times risk, all of the bulls are taking heavy profits there. And then we had a wedge on the Dow. The wedge actually made a new high. So also there, different behavior than the mini. We made a new high and then we fell below this higher low. Traders sold below 28, 200-point swing. So starting around 400, finishing around 200, and then 200-point swing on the way up as well, starting around 200, finishing around 400. So 200-point swing up, 200-point swing down there on the Dow. Right now, you can see that here we have broken the high and traders are buying, they're long, but it's stalling here. So above here, traders probably are trying to get out or are getting out because we're stalling just above prior range high. NASDAQ, always popular with a lot of traders. Take a sorry, check my screen. NASDAQ, always popular. So sideways range yesterday after a big sell-off. Apple results in there. Bar 1 wasn't your buy, right? We didn't break above this lower high yet. So your buy was above 4. So your buy above 4, stop below 1. That's probably going to give you a 1-to-1, and you can see that you had a 1-to-1 there. Also here, wedge, pullback, short, major trend reversal, higher high, major trend reversal, short, coming back all the way, basically creating one big trading range, still staying around the 8 low or higher than the 8 low in there. But also here, the lower high is there, $20,275, and we haven't broken that. So this is still looking to go short. And then oil. Oil had a fantastic closing bar yesterday at the end of the month. So this is the close of oil. The oil market closes at 2:30 Eastern. This was the last bar of the month in oil. Look at how that rocket ship just went berserk yesterday at the close. But really big sell-off here. New lows, new lows, new lows all the way through. Market already closed, but beautiful bear trend all the way into closing that gap where that spike started. So market still neutral, no bulls stuck, no bears stuck. We're waiting for the next impulse. Probably just waiting for Brad to come in, honestly. This is how it often works, right? You have Al Brooks on, the market shoots up 20 points. You have Tim Fairweather on, the market drops down 20 points. You have Tim Stout on, the market goes horizontal within a 10-point range. So second attempt for the bulls at breaking that double top. And they just did it. But what will be above it? The 75.25 is still a target up there. Still looks to me like probing for a price where the bears will want to sell this lower. Coming to the trend line as well. So first break of the trend line probably needs a test back down. I'm thinking that, oh, I removed it, but I should have not done that. That 61.50 on the 50-minute chart is still target. So no chance I'm going to buy here. Bulls got the breakout to 75.25 and a point extra. Is this the start of an enormous bull trend to higher prices? Well, some bulls will buy above 68. They correctly see a double top being broken, and they wonder if that will give them the measured move to 85.50. I think there's something wrong with 68. It didn't close on its high. It's at an area where I think the bulls will want to get to instead of going higher. So can you buy above 68? Probably yes. Do you then need to scale in lower to get out if it doesn't work? Probably yes as well. So you can't buy it with all of your ammunition power, right? Stop below 67. Just trigger the buy. What is the target? Well, if your stop is below 67 and you buy above 68, you should at least get 1-to-1, which is somewhere up here. I've got to be honest, the more I see this, the more I think we'll go lower. Failed breakout on the upside of a trading range leads to a successful breakout to the downside of a trading range. Been there, done that, got the scar tissue to prove it. Now, it's close above the moving average. It's close above all of these prior bar highs. It's a close above the double top. So yes, we're all in long. Bulls buy above 68. They'll manage their position with the stop below 67. I think we'll go back to the 44 low, at least 68.50, and I have 61.50 because I think these bears selling the close on the 15-minute chart will also want their money back, right? So why is price coming up here? Well, because if you're using the stop above 47, which is 68.25, and you won 61.50, this is your 1-to-1 price, 74. And if you want a 2-to-1 target, price needs to come to 78, right? So you sell with a limit order here, you have a stop there, and you want 61.50 there. That's how bears can engineer a trade for themselves. I need to see consecutive bull bars stronger than just a 68 follow through after 67 for me to want to buy this. Whether the bulls want to take it to, well, the bulls want to take it to all the way here, so all the way into this area, and then of course 5807 at the close. That would still be 32 points. Like I said before, judging if a trade is reasonable or not is looking at, is it at least going a point above the signal bar? 76.50, we didn't reach 77.50. In fact, we went one tick above and we started to come down. Now, we're also not coming down, but this is not the follow through on the best bull trade that you've ever taken in your life. So the bulls are stuck above 68. The sell-off wasn't that strong, so a lot of bulls will hold and see if there's a second leg up coming. To me, it looks like we're moving into an area where more bears are starting to get short. We're also at the midpoint of this range, right? A little bit above the midpoint. So you can, and I showed this at the beginning, you can basically divide this area in three parts: a bottom third, a low third, and a middle third, where here you would want to sell. Here you might want to buy, depending on the concept, on the context, but the context is a bear trend, so maybe you just want to cover shorts and sell short. We're still a inside bar on the daily chart. I had the Globex daily chart before. This is the RTH chart, so only showing the regular session. On this though, this low was broken. So still an inside bar, but look at how strong this inside bar is. So on the daily chart, this looks weak, and unless anything happens, we're probably going to go back sideways to down for another more leg and test this low again. So this 34.25, we tried to break below it once. We're now bouncing back to the low of October 23, and the bears will try again to break that. So I think we're going to come down to 34.25 again, and then the bears will try to break it again. If that fails twice, then we'll probably come back up. When will we know? Probably the night after the elections. '70 is a test of the double top. So double top test. Bulls hoping for a measured move up. 85.50 would be that measured move up. I don't see it, but that's what the bulls are hoping. You got to believe in something, right? But I don't think this is a successful breakout. A successful breakout above a trading range looks like a breakout, some follow through, then maybe a pullback test, and then continuation. 69 limits the chances of a successful breakout significantly. Every close so far is still above the double top, so good for the bulls, and there is still a chance, but this is not what a typical sudden breakout above a trading range looks like, with follow through and a rapid acceleration to a measured move. So with every minute passing, the chances of a failed breakout above this double top are increasing, which would mean that price comes back into the range, at least tests the 67 high and the 66 high and closes these gaps here. If you look at the whole day, well, if today is a trading range, big up, big down, sideways, then I'm looking at gaps. and there's one gap there to the 48 low that needs to be closed or could be closed. Might not be today, but I see one gap there and I see one gap to the 67 low, 67 high. Can the bears create consecutive bear closes? This is a moving average gap bar, right? A sustained bear trend, and the first time that we have bars floating above the moving average, completely separate. 48 was not, but these are completely above the moving average. So it's a moving average gap bar short, but no good signal bar. Bulls will want to have prices come a little bit higher. They're trapped above 68. Yeah, you don't need the official results, just opinions, and like institutions will have their own source of information, right? So exit polls and things are enough. The official results won't matter. It's about predictions, right? Trading is all about predicting the future. So as soon as you see the first couple of results come in from states, then the market will fill in the blanks and just start guesstimating what the result is, and then start trading that way. You don't want to wait until like the announcement and stuff, then all of the price action is already gone. You need to predict the future. Little channel, false breakout above the channel. So we met my 75.25. I think it's now time that we're gonna go back to the 61.50. That's a better bar for the bears. Sell below 71. Bull still stuck above 68. Increases the chances of the bears putting price lower. Beautiful failed breakout above a range. Someone's asking about the Hang Seng index. So this is daily on the Hang Seng index. I covered this last time in the trading room. You had this mega move to the upside from 17,000 all the way to 23,000 in like 2 weeks. Super parabolic wedge, of course, right? 3 legs, and then huge bear bar. This was a sell-off from 23,000 into 20,800, so 10% off in 1 day, and then small second leg down as you would expect. We're hovering around the 50% pullback. So bulls are not eager to take it back to the high. Bears are not able to take it back to the low. The result is a little bit more sideways. This is a holding pattern. It's waiting for more information. So unfortunately, it's not really tradable without a breakout. So I would wait on the Hang Seng index. So after this bar, I'm gonna give the baton to my good friend Brad, who is covering the final 30 minutes of the price action today. Obviously, he is completely entitled to his own opinion. So where I'm still thinking that we're gonna go down, he might not necessarily say the same. We're just here to tell you how we're seeing price action unfolds and what we think is most likely going to happen. And so Brad is covering that in his own expert look. I'm still short on my swing, and I'm now also short on a scalp. So I think we'll see 61.50. I'm hoping for 51, for 55.50, and with the help of higher powers, we could get to 33, which would be icing on my cake. It would be nice if we at least get the 61.50, but we don't necessarily have to get, of course, to the bar one low. I'm just thinking that we will. Did I skip the Russell? Yes, my friend. I'm sorry. I skipped the Russell. I always forget it. Is the schedule already up for November? No. So by the end of today or on the start of Monday, trading admin Ken, he will create the schedule. He will release the schedule so that we know when to present, and he will create the subscription sign up for November. So before the start of Monday, oh, I see November schedule is there. So November schedule is there, and then the sign up will be there on Monday as well. So if you short now, you get 2 points. Use that money to sign up for the November trading room, and you're all good to go. All right, so all in short, with breaking that, can this become a measured move down? Absolutely. So 54.25 will then be measured move down. We got my 65.50. I need my 61.50. I need my 55.50. I need my 44, and I need my 34. Are you having a question, or did I miss a question? I'm sorry. If you sign up on Monday, you can download today's session. I think that is a yes. Yes, that has been the case. Question is about when do you use the scalp size, when do you use the swing size? So, oh, we just hit my 61.50. Well, the price action determines which one is better to use, right? So in a swing above, like, am I gonna go full in above 8, or do I need to scale in lower? Am I gonna trade it like a trading range or as a trend? Well, that is absolutely a trend, right? But when I see this sell-off, now I know it's not a bear trend, it's not a bull trend. We're scalping. Like, the best way to look at if something needs scale in or not, or if you're scalping versus swinging, is probably to see again the depth of the pullback. This pullback 55 was more than 70% of 54. So first of all, I don't want to sell so low anymore, but it is that's an indication that scalping even below bars is more difficult. The best swing is probably always that as soon as the market becomes clearly always in long or always in short, the first signal bar that follows that, that's probably your swing. So today the market clearly became always in long on bar 1, so that was your 20-point target. The market clearly became always in short here, breaking higher lows, right? It didn't here because it didn't break higher lows. Clearly became always in short here. First swing short was below 33, and then 20 points later, you're here, right? So, and sometimes I scalp and then I don't take all of my profits on the scalp. So I leave a little bit of the scalp, but that's just flexibility that I'm not going to bother you with. So we hit my 61.50. That was my minimum target. Can we still go lower? We have to see. The market was briefly always in long, but it's now always in short. But it just fell into that 61.50, and looks like a lot of bears are covering here. So I would not be surprised if we just stay sideways around the bar, around the open of the day as well. There's one guy who knows that much better than me. His name is Brad Wolf. He's going to come in next. I'm wishing you a very good weekend. I see you on the other side. Have a good weekend and talk to you soon. Bye-bye, everyone.